It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast. Yes, your daily pulse on the Australian property market. From Port Macquarie to Melbourne, we are talking to some of the smartest and sharpest minds in real estate, just to cut through all of the noise on the ground that is out there and focus on what is the most important talking points for you. It is a Friday, August the 7th. If you're celebrating a birthday, happy birthday to you. I see it's Wayne Bennett's birthday, one of Australia's most successful rugby league coaches. He is turning 76 today. Happy birthday to you, Wayne Bennett. Sydney's property market, now it is clearly feeling the impact of higher interest rates and changing buyer confidence. New PropTrack data does tell us that prices have now fallen for 5 consecutive months, making Sydney the weakest performing capital city over the past month, and houses have experienced the largest decline, while units, they are proving more stable and holding their ground at the moment. And units, yeah, that is the big story for the moment. I think for some time, that is what we can expect. Lots to talk about around those units moving forward. Right now, let's take you to Melbourne. We're going to catch up with Lou Lihari. He is a buyer's agent there, and welcome on to the Real Estate Breakfast, Lou. Melbourne's property market, if we turn our attention, I tell you what, we've been talking about Melbourne for the last 7 days constantly, because the market is still very much under pressure, you know, with the house prices falling this time for the 5th month in a row. The city's median house price is now at around 971,000, showing that buyers are becoming a lot more cautious, as we've been talking about, while sellers are finding today's market much more tougher than it was earlier this year. So with all of that, how are you finding the market?
Morning, Craig. Yes, look, there's definitely been a shift in the market. There's no doubt about that. And a bit of that sort of plays with the media hype at the same time. But where we sort of sit with our buyers and the clients at the moment, it's more of an emotional buy than based on the actual data. And the data is what it is, and we get that. But I always sort of say that when you're looking at buying, if you're buying with emotion, when the market's hot, you'll get out there, you'll start bidding, you'll compete against buyers, and you'll pay more than what the property's pretty much worth to some extent. Whereas in a downward market, which is where we're at the moment, people fear to sort of, well, we're not going to buy it because other people aren't bidding. It's a bit silly in a way when you look at it, because today's a very good time. If you want to buy, definitely recommend you look at that.
Yeah, one of the talking points from Melbourne in particular is the trend of a lot of homeowners just deciding not to sell. They're looking at that price point and they're saying, no, I can afford to just sit and wait rather than accepting that lower price. They're waiting for market conditions to improve, which means fewer properties are coming onto the market, creating a different type of supply challenge across Melbourne. How much of that are you seeing?
Granted, it's winter, and every time this year, the supply is quite low, but vendors, sellers are definitely now sort of holding off and sort of waiting until maybe spring, and let's see what happens in spring. What we are finding, though, within our business is that there are quite a few sellers who are potentially looking at or liking the opportunity of selling off market, hoping that they can get someone that come across and probably pay close to what they would like to sort of see, irrespective of where the market sits. But I'm expecting spring to have an uplift based on the conversation we've been having with a lot of real estate agents and where their stockpile sits at the moment.
You say off market, though, wouldn't in this particular market, wouldn't that make it really hard to sell off market? Because as I always say, it's not mass market. You've got a much smaller clientele. That'd be pretty challenging, wouldn't it?
To some extent, we are purchasing 1 in 2 at the moment off markets. So 1 in every 2 properties that we look at are purchased off markets. The sellers are saving quite a lot of money from the marketing aspect, time, efficiency, not needing to style the property and what have you. Now, in saying that, there are some that we always sort of say when you try to sell a property, you're not selling a secret. But because of the situation of the current circumstances where the market sits, I think the RBA are coming out next week to tell us what they're doing with their interest rates. This is where some of the sellers are like, okay, I do need to sell for whatever reason, and we'll look at that option.
Yes, and while Melbourne has softened, regional Victoria is telling this completely different story. Many regional towns are still recording annual price growth, largely because housing supply is remaining tight. It does highlight just how different property markets can perform even within the same state at the same time.
That's totally right. And we're finding that obviously with lifestyle and changes, and if we go back to the pandemic, when everybody wanted to sort of move out and what have you, we're still finding that a lot of people are wanting to move further out away from the hustle and bustle, hence more buyer activity. But at the same time, and with all due respect to regional buyers, that does fluctuate more than it does within inner Melbourne when the market does sort of change. So you can have a good increase, but at the same time, you can have quite a severe drop.
Are you looking forward to the RBA meeting, which is coming up very soon? Some of the market indicators would suggest there won't be any movement, but there are some possibility that, it's the RBA. Anything could happen.
Yes, no, definitely looking forward to that. Would love to sort of say that there won't be another increase, and my inkling tells me that there might not be, but it's the RBA, as you said, and we all just wait and see what happens on the day.
All right, we're talking to Lou. He is in Melbourne. We are back after this.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. Unravel the real estate market to help guide your real estate journey. We deliver the most property podcasts across Australia every week.
Yeah, and talking of selling, have you decided to sell in this market, or are you currently just playing out the market? If you are thinking of selling, do you know who to trust your property listing with? Reason I say this is that we have this curated list of real estate agencies and agents. These are people that we know, we trust, and if you are looking to sell, you can tell us your location. What we do is we play somewhat of a matchmaker. Let us know the area. That is really important because we do get these emails coming through and you don't tell us what part of Australia that you are in. Make sure that you include that. The email address is myrealestatepodcast@gmail.com. And even if you already know who is going to represent your property, throw our suggestion into the mix because, hey, it's only another meeting and you might be surprised. It is a Real Estate Friday. We are working into another weekend. Lou in Melbourne is with us talking about the upper end of Melbourne's market. There appears to be a feeling of this big impact, like expensive suburbs have seen larger price declines, while more affordable areas have been relatively resilient. Affordability, as we know, it's becoming an even bigger factor in where buyers are choosing to purchase their next home. The upper end of the market, Lou, some people are really struggling here.
Without doubt, we're finding, the more affluent suburbs, but let's talk about, Brighton and surrounds. They're taking a hit. You've got buyers there that are sort of just holding, or sellers that are just holding back and just sort of waiting to see what happens. And we do get some sort of intel at times that we've got some owners that are in desperate needs of making a sale, pretty much a fire sale, and which is unfortunate. They've purchased back in the days of the pandemic and paid overs and now need to move it on and unfortunately aren't going to get the value in it. So, we definitely find it. Whereas the more subtle suburbs, I think that has to do a lot with also the government scheme, the 5% government scheme, which has helped a lot of first home buyers get in. But it is a little bit concerning at the same time because with the market doing what it's doing as well, when you're borrowing pretty much 100% against the property, that is a bit of a concern.
Yeah, I guess when you're looking at the upper market in Melbourne, if you take, say, a Toorak, a lot of these properties, they don't have mortgages on them. So people can let's just wait this out. You highlight some where they're fire sales, but for a large cohort of the exclusive market, they're just playing the time factor.
Without doubt. There are quite a few at the same time that would just sort of wait and sit there and see what happens with the market, and no need to go to market at this point in time. But I think there's a lot behind closed doors that we have this understanding of these people living in affluent areas and they're very cash rich. But like I said, the understanding and the somewhat intel that I'm getting is not the case with many, unfortunately.
With all the different changes that we've had this year, particularly with the federal budget, taxes, etc., how much of an influence with your clients in all of that equation has that been a factor? What are you seeing sort of post-federal budget announcements?
Well, the first thing that completely fell off a cliff were investors. Prior to the announcement, we were getting quite a few interstate investors coming to Melbourne, wanting to buy and what have you. Once negative gearing was cut, that literally fell off a cliff, instant. So we predominantly within our business now are just dealing with owner-occupiers, be it first-home buyers, upsizers, downsizers. But that was clear as day as soon as that announcement was made. At the same time, speaking to a lot of other advocates and those who deal with sort of self-managed super funds, they too are finding that that's pretty much becoming non-existent now with the changes as well. So there has been quite a bit of impact.
Where have those investors gone? Like, we speak to some investors, some buyers, agents, advocates, etc. from Sydney and from Perth. A lot of Perth investors are going into the Melbourne market. Where do they go after Melbourne as a result of those federal announcements?
Well, that's what we were getting, a lot of interstaters. And I would say now, if you look at potentially the Brisbane market, which has come back somewhat as well, I would say they would probably find that probably quite a few from Perth will be going across the eastern seaboard to Brisbane to look into that sort of market. And then obviously if you fall further down to Sydney, well, Sydney is obviously it's still the number one market, but it's fallen quite considerably. So I'd say they're probably your two states that people will be looking at.
And in terms of Melbourne, with fewer homes selling, government there collects less stamp duty revenue. And if sales remain subdued, there will be increasing attention on how states replace that lost income while continuing to fund housing and essential public services. How much of that piece do you concern yourself with? Because it's maybe a little bit outside of your immediate lane, but it does go to show that there are all sorts of knock-on effects, as a result of less sales.
Without doubt. And it's been a conversation I've been having for quite some time now with a lot of my colleagues that, yes, stamp duty is obviously a major factor. And with what's taking place now, there's going to be impact. And what do we do? And I'm not going to get into the political side of things, but, do we introduce another tax on top of another tax and what have you? So it definitely is a concern. And I'm not sure how it'll be handled by the current government or if we get a new one in November.
Now, it is a Friday. We're heading into another weekend. Give us a sort of a little bit of a flavour. Tomorrow is Saturday. How busy is your day looking, typically now in this market?
Yeah, look, if I run through my calendar, we start from just after 10 and we finish at just after 4. So it's a full-on day. The market itself, and we're still speaking to a lot of people out there, a lot of buyers out there. Granted, some are sort of hesitant and wanting to, we always get asked the question, are we at the bottom? Is now the time to buy? Wish I had $1 for every time I had that question asked, but people still transact, irrespective where the market sits and what the data tells us. Volume is not there like it was, without doubt. But yeah, our Saturdays are still extremely busy.
Good on you, Lou. Enjoy tomorrow out there having a look around in terms of what is coming up for sale, those vendors that you are transacting with. And thanks for coming on to the Real Estate Breakfast this morning. Appreciate it.
Absolute pleasure, Craig. Thank you so much. Enjoy.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us. We connect you to the best real estate information across Australia. The Real Estate Podcast.